So, folks, worth asking again, will higher interest rates in the bond market sabotage the so-called soft landing? Another way of saying, are we going to have a recession or not? Let's ask John Carney, Breitbart economics and finance editor and co-author of the Breitbart Business Digest. John, front page Wall Street Journal, et cetera, et cetera. You've got a big rise in bond rates. That affects mortgage rates. That affects lending rates to corporations and even small businesses. What's your take? You're up, 125 basis points. Is the soft landing in jeopardy?
I don't think the soft landing is in jeopardy. I actually think this is telling us that the economy is actually strengthening a lot. The reason why bond rates are rising is because people are thinking the Fed isn't going to cut interest rates next year as early as they did. They still think there's going to be an interest rate cut next year. I think they're wrong about that. But what you're seeing in the bond, usually when you have bond prices fall and bond yields are going up, that's because people think the economy is getting stronger. People want to invest in equities. I mean, that's not happening right now. Been a rough couple of weeks in the stock market. But this is not, I don't buy the idea that, oh no, it's going to weaken enough that it'll slow the economy. I think what this is telling us is that investors think the economy will be strong enough next year that the Fed will be able to keep fighting inflation with high rates and won't need to cut.
Mortgage rates closing in on 8%. That can't be good, John. It cannot be good for the housing market. And related, consumers live on those mortgage rates also, right? They borrow home equity loans. This stuff's going way up.
It's going
expensive.
Way up. And bizarrely,
it's unaffordable.
As I said in Breitbart Business Digest the other day, the housing market has gone berserk because housing prices are also rising. It's creating the least affordable housing market I think that we've ever had because you're paying high rates and high prices. So, and particularly when you compare to income, prices are out of control, mortgage rates are out of control. The question, though, really, that I'm really worried about is what happens when the Fed starts to cut and interest rates start to go down. We're in danger of a really huge housing boom at that point. Because if prices have maintained their height with interest rates at near 8%, imagine what happens when interest rates drop down to 5 or 6%.
What if the Fed raises their target rate?
I think the Fed will be very hestant to do that because that is a surrender. That's them saying, we give up, right?
No, raising the target rate, they want to get to that 2%.
Oh, no, I thought you meant raise the target rate for inflation. No, you're right.
No, not for inflation, for their own Fed funds rate, because inflation is creeping higher. You've written about this the last couple months. Now, oil prices sold off today. I get that. But nonetheless, a lot of prices, there's a lot of inflation embedded in the system. So what if they raise the rate?
I think they are going to raise the rate at least one more time this year.
There you go.
And I think they're going into next year thinking that they won't have to raise again. That's their current plan. But I think they're going to once again be proved wrong because I think inflation is creeping back up. It's not going to get back down to 3%. As I put up a chart the other day that showed what's happened to the M2 money supply. And what has happened is that it's gone flat. It's no longer coming down. It collapsed early on when they were raising rates quickly. That's what you'd expect. It's now going flat. So it's no longer having a restrictive effect on the economy. And I would love to talk to, like somebody like Ed Hyman to, get his view on this because these guys have been looking at the money supply for a lot longer than I have. But I think it right now is telling us that the Fed probably needs 1 or 2 or 3 more hikes.
Get to 6% on the target rate. I think that's getting into the bond market. I think that's part of it. It may not be all of it, but it's getting into the bond market. Everybody got excited yesterday about the JOLTS because it showed more job opportunities. I always thought, John, job opportunities were good. I always thought more people working were good. Now, bond rates can go up. Maybe they should be at 5% or 6%. I don't know what the right level is. But what is wrong with more job opportunities?
No, I think it's great that we had more job opportunities. And one of the things we saw is actually we had job opportunities. Yes, a lot of the job opportunities were white-collar jobs, but that's great. That's a lot of people who will be able to get a better job because that's what's going to be on offer. But we also saw a big expansion in manufacturing job openings that I think people weren't prepared for. People think, oh, the manufacturing sector's in recession. That's wrong. The manufacturing sector was in recession. It's bouncing back. And if you look at factory orders that came out today, much better than expected.
And another one, this is a good review of all the data. The ISM Supply Managers Services came out today. a little softer, but no panic.
No panic,
Fair.
but I will say the softness is oil prices. What's happening is the high gasoline prices are siphoning money away from household budgets. So when you see that, it's not really consumer spending dipping. It's consumer spending. The new orders was got hit pretty hard in the services ISM. That got hit hard, I'm sure, because people are just filling up their gas tanks and can't afford to get a haircut.
And finally, no haircuts. I need a hair trim myself. Not many hairs left. The consensus is 155,000 non-farm payrolls on Friday.
Right.
Now, I know these things are crapshoots, but I was just thinking, you take the over or the under?
I take the over. The JOLTS number was so good that I think they probably were able to fill a lot of jobs in September.
If it comes over, bonds are going to 6%.
Oh, it is going to, it's going to go through the roof. We're going to see. I mean, it's this terrible thing.
This is a tricky
Good
period.
news is bad news, right? So the stock market will fall because we have so many people getting jobs.
All right, John Carney, Breitbart. Nobody does it better.